Yo, what's going on? Welcome back to the channel, baby. It's game time. It's that time again. Hope you guys are ready, baby. Future's looking a little red. Not too terrible yet. Not too terrible yet. But looking a little bit red. Let's go, baby. We're in there. Ready to go. Ready to go. Ready to go. So, hope you guys are ready as well. Let's go, baby. We got some things to talk about this evening. Lots of things. Lots of things. First, hello. You guys came to play tonight, baby. Julie showing love. Kyle in the building. Matthew. Let's go, baby. I smell opportunities. Yo, how are we doing? How was your guys' day? Simon in the building. Shout out to the mod, baby. Let's go. Futures, little bit red, and it's more red across the board. He said fourth. Johnny Beats, baby. Little bit red across the board. Nasdaq down about 0.41%. S&P 0.44%. The Dow down about 0.36%. It's a little bit different today because futures are down almost the same across the board. So it looks like we might, see a slightly red day overall. Nothing too crazy to be concerned with yet, but lots of opportunities out there. What's your thoughts on this closed door meeting February 3rd? You are the man. Throw up them likes. Throw up them likes, baby. Free 99. I assume you're talking about the whole SEC voting situation. And I think what is going to happen is going to happen anyways. And I think it's very clear what is going to happen. The timeline on it will likely be faster than people think. Or, I'm not sure what people are expecting, so I should be clear on that. But the SEC usually gets things done pretty fast. And I think there is a universal, when there is a problem. And we all know this is a problem. Congress, they've had multiple, not even political, but they've had multiple hearings and things with different people, whether it's Deep Fucking Value or it's Vlad and Citadel or just other meetings in general that are public about, transparency, payment for order flow, all these different things. So I think, when it comes down to disclosing positions and all of that, I think that's going to happen. It wouldn't surprise me if after the closed door meeting, it were to be approved, but it's going to happen. I think we're at that stage where there's a lot of support for it. And it's arguable, but they're supposed to do what the public feels like, right? You're voted representatives. So I do think it's coming for sure. But I think it's a good step in the right direction at the very least. Bought 300 shares today. Let's go. Mr. Simon with the let's go. Mr. S voting free 99. Oh, yes, sir. Just like the subscribe button. Oh, it's good. It's real good. How was your guys' day? Holly Muppet, let's ride the green wave up, baby. Oh, yeah. It's looking a little bit red. We had some comments. We had some Fed, some Fed members that kind of upset the markets for a brief second. You can actually see that in the SPY earlier today. This was the Fed's comments. And for a minute there, it looked like we might get one of those just horrible sell-offs into close, but it did reverse quite substantially. But what he said was, Federal Reserve Barkin says businesses would welcome higher interest rates. Richmond Federal Reserve President Thomas Barkin, said it's been his experience that at least for those in the business community, interest rate increases will be welcomed. In quotes, they'd like us to get back to at least a normal interest rate posture and not be simulating more demand on top of normal levels, he told CNBC's Closing Bell. First thing, I don't know what business owner they are talking about, because I don't think anybody is terribly mad about low rates. It's the inflation thing. But he was one of the several Fed speakers Monday. Kansas City Fed President Esther George suggested that a faster runoff of the balance sheet could ease the amount of rate hikes needed. I don't know what's better. I think raising rates is probably better as far as the stock market and preventing a major just collapse. Last time we had a Fed balance sheet runoff, it was not so hot. You're talking 2016, 2018, 2019. That was balance sheet runoff. That was, you think we're getting whipsawed now? Man. Had down weeks, up weeks, down weeks, slow climb, and then straight into the ground. Thanks for all you do. Probably should put enough financial advice on your screen. Protect yourself. That's a good call. That's a good call. That is a really good call. Thank you. I'm in the building, Tyler. What's good? Hey, father. Let's go, baby. Alberto in the building. Yeah, but it's going to be very interesting. Tomorrow, you got your Exxon, AMD, UPS, PayPal, Enterprise Products Partners, Alphabet, Pelt Group, GM, ArcBest, Starbucks, SiriusXM, Gilead, MDC Holdings, Electronic Arts, Manpower Group, Match Group, Linux, MicroStrategy, Stanley Blocks and Decker, and A10 that are reporting. So, a lot of these are in after hours, though. Some of these smaller names, less known names, are in pre-market. So you may see a move in different sectors based off of that. Like the home builders might see a move with some of those stocks in the morning. But the big guys after hours, AMD, PayPal, Alphabet, it's going to be exciting. It's going to be very exciting. Don't we have oh yeah, Alphabet. I mean, Google, Alphabet, whatever you want to call it. That's going to really move the markets a lot. PayPal and AMD are definitely are up there. Starbucks with your food stocks, your more retail your food stocks, Chipotle's, McDonald's, stuff like that, they're going to move for sure. Tomorrow is the same old day. AMC does nothing. I mean, today AMC moved. I mean, it was up 6.64%. Not a shabby day. 17, 18, perhaps. I mean, that's certainly possible. That's my end of the week price prediction is $17 per share. That's where I think a little bit over, a little bit under. I think that's, where I would put a reasonable price target. I mean, I expected a green day, but not really over 6.5% green day today. But still, yeah, in between 17 to 18.50 is really where I would expect the stock to be by the end of the week, because ultimately we have Apple earnings out the way, we have Microsoft out the way. If Google is good and some of the other larger stocks are good, like Facebook, then we're smooth sailing. But I mean, I think advertisement is probably going to be the weak sector, because I know what YouTube CPM rates have been doing, and they're pretty ugly. So I think you're going to see some bad guidance out of those companies. And depending how the markets take that, that's going to send us up or down quite, dramatically. I personally believe we might be able to shrug it off, but I mean, Apple certainly, if Apple comes down too, based off of that, showing slower demand, that's really where you get a clapping. But yeah, 17, 18, I wouldn't bet for tomorrow. I mean, we did move up $1 today, so 17 is certainly possible. But futures do look a little bit red right now. This could all flip by the morning, though, but it's pretty much red the same amount across the board. The Dow, S&P, and the NASDAQ. Show me 10K or I will not sell. There we go. Buy the fire sale dip. It's going to be a few more power steps at a time. Yeah, and I mean, for just all, I mean, most of your market is already in a deep bear market. So this is, recessions are made, or millionaires are made in recessions, bad times in the markets. Like during the Great Depression, it was a terrible time for a lot of people, but the most millionaires ever were created during that time. Oh, it's certainly a bull trap, though. I definitely think we're going lower, but this is a cool-off phase, I do think. You've been saying we ride it down for the past week. When we riding for real? Yeah, we're riding for real. Let's go, baby. Yeah, I mean... we do have some Russia-Ukraine escalations as well, too. Ukraine calls for peaceful solution to Russian military buildup as Russia-U.S. spar at UN meeting. Key points. Russia's ambassador to the United Nations said on Monday that Kiev still hopes for a diplomatic resolution with Russia even as Moscow sends more troops and weapons to its border. His remarks come as an estimated 100,000 troops equipped with advanced weaponry line Ukraine's eastern border with Russia and northern border with Belarus, a Moscow ally. While the meeting did not yield any action or a joint statement, the ambassadors from the U.S. and Russia exchanged dueling remarks at the international forum. Russian Ambassador Vasily Nebenzia, I don't know how to say the names are tough. Foreign names are tough, but blamed the U.S. for provoking escalation at the border and falsely accusing Moscow of preparing to invade Ukraine. It was actually confirmed as well that they are sending blood to the border. So that's seen as more of a urgent thing because blood obviously does not last all too long. So that was confirmed, so that is actually happening. So if you're looking at some kind of invasion, I'm not sure exactly how long blood lasts. That's probably, a good thing to look up in the context of that's going to be a huge driving factor in the markets. You can't even underestimate that because, there's people calling for a 10 to 15% decline. Probably a 5% down day wouldn't surprise me. We had that about a week ago. Well, not a clear answer. Weird question to ask Google, though, I would imagine. But I would think it doesn't last all too long. So some people are saying it would happen after the Russian Olympics. I know I didn't spell that right. February 4th through Sunday, February 20th. Jeez, 16 days long. I did not think that. Okay, well. Yeah, February 20th. That would make sense. Now, financial advice. Do you believe we will see a climb to an explosion like back in May or June? Or do you think we will get this number out of nowhere like Randy Orton? I think we'll get that level, kind of like what happened with GameStop. It went up a lot, but it never came back down to those levels. AMC did the same thing, but it's come down a lot more. I do think you'll see a big rally like we seen in June. May and June wouldn't surprise me, even if it happens in June, ironically. But and then I do think we will hold up a lot better this time around. I mean, because retail cash on the side, or the amount of puts or hedging retail has done right now, is at an 8-year high. So there's a lot more retail investors that are in the markets now. There's a lot more retail money that is in the markets now. And there's a lot more jumpiness. So once you get the green light, and once people start to say, hey, this is a risk on event, it's okay to start plowing money back into stocks. I don't think retail investors are going to go from, hey, the Palantirs of the world, the AMCs, the BBs, the fucking people were buying what's it called? Hertz and shit. I don't think they're going to go from that to buying like index funds. So I do think a lot of money is going to flow back into these stocks, but I do think it'll hold up better and then give us room for the next leg up. Because shorts, I mean, they would cover by now. If this is an ego battle at this point. Like, you don't short a stock down 60% in the last 3 months and not cover on it, Tyler, why, if you provide clear analysis, do you have some viewers who do not agree with you yet here posting negativity? The ego condition is real. Yeah, I mean, that's just something that, people have various wide-ranging opinions, and I think it's healthy to disagree, but I mean, I think people have a lot of influences just everywhere, and choose to go with what's what. I don't look at anybody, like personally that they're right or wrong. I just look at the opinions, and I think you can find a lot of value out of that, and that's what smart investors do. Is I doubt any one of you guys believe everything I say or what somebody else says. I mean, you're destined to lose money eventually because everybody will lose money. But if you take in the opinions, like, yeah, that makes sense, that doesn't make sense, that makes sense, from all different people, then you could do well. But I don't think everybody does that. And I think some people are just very narrow-minded when it comes to people they like and what they choose to follow and believe. But, I mean, thank you for that. Admiral Kavar, it's a trap. Star Wars, it's a trap. Paradox, baby. Woo! Woo! $3.99. $3.99 for the like button. 99 cents, baby. I appreciate you, brother. Appreciate you, Torpedo Truth. AMC, let's go, baby. Win Lambo. Go Rams, Matthew Stafford. Rough out here in these streets. Yeah, Wall Street is bloody these days. Worse than the ghetto. What happened? Ooh. You got some Russia-U.S. escalations. Russia has confirmed sending plasma to the front line, not seen as a good thing. You have some fear about China. You also have the Federal Reserve saying that businesses would like extra rate hikes and they would be not opposed to raising rates at a 50-point basis if they had to. So there was a lot of hawkish things from the Fed today. That's kind of why the pre-market, the futures are down across the board about 0.4%, which looks like a more solid red day. But I love the red days because I want to buy stocks for cheap. This may sound stupid, but I want war and a market crash to set off the MOAS. Yeah. I mean, I could do without the war part because I know they're going to be like, yep, I'm drafted. Like, fuck. Like, y'all need to stay out of other people's business. Like, I think they should just let Ukraine vote. Just vote. Because I know, like, half the population resides with Russia. Just let them vote. Screw the wars and the tanks and the sended blood and all this. Let them vote. Let them fucking vote. Putin's got the EU leaders looking like fools. Come on, if it comes to war, he would crush the EU and the U.S. Hypersonic missiles, mutually assured destruction ain't going to happen. I mean, he would not crush the... That's not even an argument. I mean, we have 8 out of the 10 aircraft carriers in the world, and those are seen as virtually unsinkable. I mean, we would beat any country, and no country would be able to invade us. So, I mean, I wouldn't be worried about that. America is the hardest place to invade, and it'll never happen, at least in our lifetimes. But With that being said, it would be a long battle. And Russia is not strategic. Russia is one of the most unstrategic militaries there has been in modern history since World War One, World War Two. They helped win World War Two just by brute force, just by killing off millions of their soldiers. You ain't backing down. You're gonna die out there, and you're gonna push forward. That's how they roll. I mean, that's how they might crush the spirits of everybody. But I mean, Russia does not. I mean, mutual destruction pact. So they, nukes. That's a different story. We all lose in that sense. But I mean, Russia alone against the EU. I mean, sure, but not with the U.S. I mean, nobody can mess with the U.S. if it's for the right cause. I mean, people are so divided. I mean, good luck fighting somebody else's war. But if somebody attacked us or like killed, say, 10,000 of our troops or something, sure. I mean, you're going to have hell to pay. Listening to a lot of people very gives you a lot more perspective. Exactly. Like, I don't agree with what, what's his name? Dave Ramsey, all the stuff he says. But I think there's value out of things you could pick apart, like put things together. Like, because of what he said, like about him going bankrupt with bridge loans. Like, if you don't know much about real estate, like I always didn't. Now I own rentals and property management stuff and all that, and real estate agent. Like, I wouldn't have probably known about the dangers of like bridge loans, which is not good. Vlog Cabin Life, baby. Show some love. Smash that like button. Appreciate it. America. I mean, if we could talk about war, because I'm secretly like a World War II buff. Just love it. I mean, I don't love war. It's my least most like thing, but the strategies involved are priceless. I mean, Russia, China, and North Korea could not stage an invasion of the U.S. Not all three countries combined. That's impossible. You can't invade the U.S. As far as like fighting, in other countries, I mean, we still have everybody beat in that aspect. But I mean, you put China, North Korea, and Russia against us alone, and that's a run for our money. I mean, you're going to have the population riled behind them. Like, the UK took bombings for 180 days straight. I mean, would America do that? Probably, if they had to. But, I mean, there's no chance. I mean, maybe I just have a lot of hope for America, but and I honestly think if it came down to it, like, draft the non-violent prisoners. Let them go fight for their freedom if they want to. I think a lot of motherfuckers would. I would if I was in prison. Get me out of this for, like, a non-violent crime. I think there would be... I mean, I just don't think there's an argument to make, with us losing in that aspect. But there is a real danger of sending 8,000 troops like they want to do to Europe, because if Russia accidentally, they wouldn't on purpose, but if they accidentally killed our troops, then your hands are pretty much tied at that point. You have to, I mean, do something. How many subs you think Russia got? I mean, probably a decent amount. I mean, they have the most. I mean, we spend more than all other big countries combined on military. So China, Russia, the rest of the world, we spend more than all of them combined. Like almost $1 trillion per year on military. So, I mean, we have the largest Air Force, by far the largest Navy. Russia does have the largest tank divisions, but, I mean, the troop counts are pretty much matched up besides China. They have a couple million more than us, but us and Russia, we have roughly the same amount of troops. So, I mean, But we also have a population that's twice the size of Russia. So it's like, I don't think they would start a war with America. I think they would look at that as ultimately suicide to some extent. But 6 inches or... Oh, why was that so funny? Why was that so funny? Because he goes... Oh, that's that's terrible. Yes, it is true. America has UFOs. We would win. I mean, I don't know where the motherfuckers are, but no, I hear people saying they're like in the ocean. They're like at the bottom of the ocean. I'm like, okay, maybe. I mean, anything's possible at this point. I've seen some crazy shit. We have lasers, right? I mean, good luck. I mean, I'm not a fan of war, though. At the end of the day, it's all about the nukes now. It's been since World War II. Yeah, and Russia has slightly more nukes, but we're like so close. We would destroy every city in every major metropolitan area. You know, that's why, like you said, they have the mutual destruction pacts. So, I mean, one country launches, they all launch, and it was actually very close to mutual destruction, in the 80s. We have Bigfoot. He's gonna throw a rock at your head. Oh, that's funny. And we have a new Omicron variant. Omicron subvariant. More contagious, but vaccinated people are less likely to spread it. Heard that one before. Yeah, it's gonna be the earnings, though. The earnings are gonna be crazy. Oh no, we have a Biden child with launch codes and a shiny red button. Ugh, jeez. Oh, why is that so funny? Why is that? It's not that funny, but it kind of is. Jeez, that's tough. Government manufacturing contracts pay very well. Yeah, have you guys ever seen the movie War Games? That's a good movie about government military contracts. They do. Turn off my housewives to watch your stream. Let's go, baby. Let's go, housewives. I know some people that watch that show. I was actually just watching that's like about the mob housewives, right? I believe mob wives or whatever. That's interesting. I was watching how they took down like the whole New York mob. War dogs, bro. Yeah. Fears the U.S. because that weapon. Do you know what that weapon is? Ooh. Let me take a guess. Shit. Coronavirus. I don't know. Shit. The apes. I got it. The retail investor. The fucking apes. Duh. Besides the nukes, imagine the biological weapons that exist now. Oh yeah, that's worse. I feel like that's worse. But yeah, imagine Biden leading us into a war. I mean, I think the problem with that is like, who the fuck wants, this day and age, wants to go fight for Ukraine? Like, I mean, you're gonna have to really fuck up if you're Russia or another country to, cause that, because people are so undivided. Like, not political, but I honestly think you'd have more people go fight if Trump was president. they'd be like, yeah, Trump, I'm going. People are like, yeah, Biden, I'm not doing that. And that's not even political. That's what I see in my life. Zombie fever is next. Oh, man, I used to have nightmares about zombies when I was a kid. And then I'm like, bro, does this really happen? The apes are the new force. Exactly. Fierce is Mexico. Yeah, that tequila's gonna take out a country. Reese strokes out Harris, taking us to war. Oh, Harris. Man, I feel like she would be crazy with it too. Oh no. That's a tough one. That would not be cool. Yeah, see what happened to SoFi today? Jesus Christ. Oh, where's the Ortex, baby? Let's get the Ortex in here. Jeez. Trump with no, I mind that Corona just spread some bats on a wet blanket. Yeah, I mean, it's pretty treacherous. Trump would never. I mean, I don't think it would be very popular right now. On a bright note, the short interest is now at 20.7% estimated. So that's a positive note. But I mean, futures recovering a little bit, but it's all going to come down to earnings right now. I mean, Peloton, I was actually going to play that news, but when I got the news, the stock did not respond, which was surprising. I just think there's so much bad news. Like, the stock went up. I mean, it came down for a second, but the stock was still up 6.59% after Peloton said they slashed 2022 sales growth for apparel unit after segment revenue doubled last year. I mean, I think there's so much bad news priced into all of these stocks like AMC, DraftKings, SoFi, a lot of stocks that a lot of retail invest in. They're just so priced down into the ground. Like I'm no fan of Hood, nor will I ever own it. And I think in the long term, the stock's doomed and the company's screwed. But I mean, there was so much bad news priced into it. The earnings were terrible. There is no real reason to buy Robinhood. Like, but the stock has climbed over the past 2 days, like 12% per day, because there's just so much bad news priced into everything. Besides Apple, Microsoft, Facebook, Google, stocks like that. Fang is... Imagine that. Imagine if Fang, came down. That would be crazy. Yo, enough war talk. We about to make some moolah this week. I sure hope so. I mean, the futures were looking a lot redder. Now they're coming back up a little bit, but it's universal across the markets. Like the NASDAQ down 0.26%, Dow down 0.26% as well. So I do think earnings will be good. That's what I even said a couple weeks ago, that I thought earnings would be good this quarter. Next quarter is really where the concern is. I know you said this week, but it kind of ties into it. But with that being said, we're not really seeing guidance. Apple is not guiding for anything, which they typically don't. There's fears growth is slowing down, but if earnings come in good and you see the rest of the large cap stocks report good guidance or supply chains are easing, then you're going to see a rush to cover on these short positions. Personally, what I want to see, because I think that's ultimately a short-term rally. I think if AMC in the short term, if supply chains are implied to be getting better, the stocks rally, shorts cover a small percentage, then sure, could AMC go back to 20, 30, 40 bucks per share? Yeah. Could the short interest go down to say 18, 17%? Sure, possible. I mean, we are at the highs since June at 20.7% now. Even estimated went up today, which is crazy because we were up like 6.5%. But in the longer term sense, I do think the markets will still come down. Once revenues really slow down at companies, that's where it's going to be key. As far as this week, I mean, tomorrow after hours, you're going to know. I mean, you're going to know what the rest of the week has in store. So Wednesday, Thursday, Friday, I mean, you're going to know. If AMD and Google are good, should be good. Facebook's a big component too. I mean, FANG, like he said, FANG is the key. World War II, Mexico fought on the U.S. side of the Pacific. The Japanese feared Mexico more than the U.S. because they saw Mexicans, man, Aztecs chopped heads and tortured victims. Yeah, World War II was crazy. I mean, just hopefully that never happens again. I'm not leaving, holding for you, my apes. And that's actually crazy too, and something financial to point out. Like what happened in Japan after World War II, you know, Japan's stock market. Fun fact if you guys didn't know this. That Nikkei what? Just give me the all-time chart. That's not what I want. See, that's not the chart. No, I will not subscribe. Like, they had a boom, you know, from the 60s or 70s really to 1999. Look at that. The market's never recovered. I'm not trying to scare any of you guys, but kind of crazy in the sense of World War II. I'm down so much, but I'm not leaving. Holding for you, my apes. Let's go, baby. Probably going to retest the lows. If it holds, then a stronger bounce back. I mean, if earnings are bad, then this bounce meant nothing. I mean, this was definitely a fake out if earnings are bad. And let's, for shits and giggles, take a look at Alphabet. Because that's going to be the main concern. That's going to set the tone for advertisements and all that. And Alphabet was only up 1.81% today. So not a huge move. Still, I mean, about $200, $209 off of its low. So not a huge move for Alphabet. Little bit less than 10%, if I believe correctly, from where we hit today. And I mean, just not a huge move. So they're going to be in after hours, and that's going to be very important. But AMD as well. Oh snap! Tyler's golden nuggets. Let's go. Can you explain Max Payne? Yeah, it's where the most holders of options lose the most amount of money, where the market makers really want to pin the stock, and that seems to be the case most of the time. You know, I wasn't a believer of Max Payne for a while, and then I started to notice the correlation and just how ridiculous it actually is sometimes. Sometimes it is off. I mean, this Max Payne is $15 by Friday. So if earnings are bad, I mean, wouldn't surprise me to go back down 6%. But that's essentially the you know what that means. Y'all who have core holdings, you can still day trade the ranges. Yeah, I mean, this is it's good for just short in and out trades, but I mean, there's no clear direction. So this is actually the toughest time to be trading the markets. Like actively trading the markets is where you're getting, I mean, we've moved a lot, but we haven't moved at all. Like besides today, we just were in this range. So yeah, you know, short-term premiums can go up a lot. Like, what I do, 3 trades today. I 2 of them were winners. DraftKings and Snapchat were winners, and I got a Facebook put at like 3 o'clock. which was, I mean, it obviously reversed. Tomorrow it'll probably be up. Facebook, when do they actually report earnings? So I believe it's, Wednesday. So I felt comfortable with that trade. I'll probably sell out of it before Wednesday if the markets do go down tomorrow. But it's just choppy back and forth. So you'll get some big winners, some loser. It's just, I mean, there's no clear direction. Like buying calls in late 2020, halfway through 2021 was pretty straightforward. I mean, you could buy calls and make money on almost everything. But now it's like you're picking and choosing stocks that, need to be somewhat profitable or have some kind of future business growth. That's why I think AMC is a good candidate of that, because their revenue is going to go from 2.3 billion in 2021 to 5 billion again in 2022. They're also more efficient. A lot of other fundamental things you could put behind that. But even with other stocks as well, not all stocks are going to recover from this. Just a heads up, like some of the stocks, like Nano Dimensions is one that I like to pick on a lot. I mean, because they lose money. Sure, they have a lot of cash. They've raised money in 2021. They've sold stock. They've done all that. But it's like, unless there's a clear path to profitability that isn't in 5 years, I mean, they're going to be down for a long time. And, I mean, that's an easy one to pick on, but there's a lot of other stocks like that. Even something like Lucid is now starting to show some weakness. And that's one of my larger holdings. I mean, I had a 125% gain on that and like $5,000. So it was a decent position that blew up. But, I mean, it's almost took all of those gains away. I mean, $29 now. This thing was at like 50 for a minute. 56, 61. I actually sold covered calls, so couldn't get out, but coincidence corona appeared after Brexit. The Queen and the bloodline are the most powerful houses in the world. Interesting. I mean, The Simpsons predicted it. Simpsons predicted it. I mean, I'll leave it to The Simpsons, dude. I don't know. That's funny. Some things are just weirdly coincidental. PIXY and BBRG are currently pretty short interest candidates. Yeah, you need some kind of catalyst. Well, what did BBIG do today? I mean, I don't personally follow it because I don't know a lot about it. I should probably look into it because it does kind of move. I mean, technically speaking, it looks pretty good. Let's look at it on the daily. I mean, you're looking at it to come back up and retest levels. We're above the 50-day moving average. So on a more technical basis, looks good. Bottomed out roughly around this first candlestick, and that's where we started to run last time. So, I mean, in that aspect, it does look decently good. Like, I mean, these are the correlations that I like to see, right? So you're looking at just, I mean, these are rough, but boom. Like, you can see just by this line a clear pattern of support that is around $2.86. So we bounce off of that. Now you're heading back up. Could be good, but you still need something. Or just people buying it. I mean, that could certainly be enough. But with something like that, I like to use options and do a small amount just to, have some exposure, but not risk everything. I think AMC is much less risky, certainly at these prices, because there is a fundamental backing, and AMC was a Fortune 500 company. I still believe it is, at least once it gets back to its pre-pandemic revenues, which will be in 2022. Do you follow the 1348 strategy? Not really. I like to just pay attention to like the real technical levels. Like on BBIG, if I was trading this, I'd be paying attention to this. But like, unless it's a buyout, unless it's some huge news, unless it is something else, like a rival company Like, let's say if Google does well on earnings, they're an advertisement business, so Snapchat and Facebook will also do well tomorrow. Well, on Wednesday, and Facebook reports after tomorrow. So it's things like that. The more macro sense will do you a lot of good, especially during times like this. Any technical factors really don't matter, because if the stock market, let's say it's down 2% tomorrow, it doesn't matter if you have a 1348 crossover. It's not gonna work. It's gonna fake you out. And if trade a small amount maybe off of that, but it's going to fake you out, especially during times of high volatility. During 2020, when the markets generally went up and you had down days here and there, the stocks could still rally. Like, that was very common. One sector would be down a lot, one would be up a lot. That happened for the past 2 years. Like, if it's not one sector, it's another. It was growth stocks for a while, then it was dividends. While it was dividends, growth stocks were not good at all. That's why we've had this sell-off for the last 3 months. So, I think that would work good, like technical factors, during a normal, non-volatile market. But during this market, trade a little bit off of it, but not all too much, I certainly wouldn't put out a whole lot of money into a trade based just off of that, but okay, bro, do you have 25K of dry powder to day trade, or 25K portfolio worth? Yeah, I do have a 25K portfolio. Now it's up to like 30,000 because today was just a good day. But it's still down substantially. It's still down like 25% because I'm not gonna sell out. I'm not gonna sell AMC. I'm not gonna sell DraftKings, SoFi, Lucid, Affirm, PayPal, Snapchat. I'm not gonna sell Abivai. I'm not gonna sell any of the stocks that I hold. So I'm just gonna be in it for the downtrend. If we fall 50%, my portfolio is gonna fall at least 60 because I have a lot of growth stocks, and a lot of those stocks are down 60%. But I've been hedging on the way down, so I've hit some nice trades here and there that have helped out the portfolio. But all in all, like if I were to pull everything, sure, 25,000, I could pull that, but I have about 10,000 cash ready to go. But I'm not selling though. That's the thing. I will not sell. I did sell some covered calls on a couple positions, but those have obviously been very profitable. Like Lucid, I sold covered calls at like 1,600 a piece when the stock was in the 50s. Instead of selling the stock, I did that and collected like 100% of my initial investment. So it was good. But you don't even need 25,000 to day trade. You could day trade all you want, especially in this volatile market, if it chooses a direction. Like I showed the strategy before. You can day trade without an account 25,000 as long as you are trading options and you get a big enough move to make it free, essentially. Enough of that. World War II interests me, but I believe some things in history are not as they appear to be. Certainly. Got my tinfoil hat on right now. Oh yeah. Let me ask you then, who started the virus? Who started the virus? They want you divided. They profit off fighting. I ain't seen this in a minute. I ain't seen this in a while. Feel like they're a little different. Don't mean it's the word going viral. Thinking that the Chinese did it, but maybe we started the virus. Maybe they want you divided. Maybe they profit off fighting. Bought more AMC, told the wife we eating cups of noodles for the whole month, baby. Right now, if there is any time in the world to eat cups of noodles, rice and beans, like Dave Ramsey would say, or, some cheap stuff, right now is the time. You want to put as many dollars to work right now as possible. And that's what you can think about. Like, every dollar is a little worker going to work for you. Gonna make you like 15 cents a year. That motherfucker's working. Tell you that one. And this was so funny. You guys know that I have another job. I'm a real estate agent, have rental properties, all that. But at my other job, I I was playing The Strangest Secret in the World by Earl Nightingale, right? If you guys have not watched this, I mean, it'll change your life, but I mean, the voice here is like very old fashioned. Some people might be into that. I mean, it's kind of relaxing and peaceful, to be honest with you guys. But watch that. Strangest Secret in the World, Earl Nightingale. And, I mean, it changed my life when I first started investing and actually, listen to it. Now I listen to it about once a month, about every couple of weeks, give or take. I don't have, like, a schedule. But I was playing it, and somebody said, like, this guy, I don't know what he's talking about. And I'm like, what do you mean? He's like, you can't just, think in positive terms and get positive results. You can't just think and make money. I'm like, what do you want to do? He's like, well, I want to make money too. I'm like, do you have investments? And then somebody else, and then he was obviously that he doesn't. And then somebody else spoke up, and they're like, yeah, that is bullshit. I'm like, well, what do you want to do? They're like, same thing. I wanna make money. I want to do what I want to do. And then they're both talking. They're like, well, if you invest, you're not guaranteed to make money. And I looked at him. I said, okay, do you think in 10 years from now, the American economy will be smaller or bigger than what it currently is? And they're like, yeah, it's going to be way bigger. There's my point. Like, what are you talking about? But yeah, long story short, I mean, that was a very funny kind of argument I had, but little bit of an argument. I mean, it wasn't like crazy big mad big T over here as Edward would say, but it was an interesting one. But yeah, check that out. It would definitely help you guys out and change your life, hopefully, like it did me. What's the futures doing though? Yeah, dude, it's so matched up. It's weird. Nasdaq and S&P down 0.39%. Dow, geez, not down as much. Strange. Let's see. Actually, I want to see what other earnings are actually Wednesday. Abify, that's one I invested in. Facebook, DR Horton, Qualcomm, Thermo Fisher, Spotify, Waste Management, Lightspeed, Marathon, Suncor, Dynatrace, T-Mobile, Humana. Humana actually had some news today about possibly selling off some of their units. So that could be an interesting earnings. Align actually got upgraded today as well. Johnson Controls, Century, Communities, Capri, Cuckland and Sofa, no clue what that is. Boston Scientific, SI Time. Thursday, Nokia, Amazon, that's the key. Ford, Penn National, that's going to be an interesting one as well. Snapchat, another one. Pinterest, they could move together. Activision, I know some of you guys called that out on what was that live stream a couple days ago? And Merck, Sunoco Phillips, Lilly. Geez, Eli Lilly is such an old company. They've been around forever. Honeywell, Unity, Fortinet, Estee Lauder, Cigna, Skyworks, Skechers. What? GoPro is still around? Dude, why have I not seen that stock in like years? It was like the most hyped stock in 2015. What the hell's the ticker for it? G Pro. Oh my gosh. Oh my god. Oh, that's terrible. Poor investors, bro. Went from 100 to 2. Jeez. That's tough. So thinly traded. It's crazy. For a NASDAQ. Yo, homie, what's going on, brother? China was pissed off due to trade challenge by the U.S. and let cover rip is obvious if you look at the timeline and communications and lack thereof. Yeah, they're just very secretive too, They would rather contain something on their own rather than let something, and I mean, I was really sick in November, and I did get COVID in August, and that sucked, but I was very sick in November. Like when you first started to hear about COVID headlines. Like the first COVID headlines was when Kobe actually passed away. Rest in peace, Kobe. That was January 26th. And there was headlines in the newspaper before Kobe and on the same day. So, I mean, rest in peace, Kobe. But, I think it was actually around for a lot longer than people realized, to be honest. But, nice calls last night, bro. You said Intel and I grabbed some calls on it and made 116% on EM trading today. That's why you joined the community, baby. Let's go. Glad you made some money. Actually, when I was a lot smaller of a channel, I called out a trade. I forget what trade it was in a video. And a viewer, I don't even remember what his name is, to be honest. This is going to sound bad. But don't remember what his name is. Haven't seen him since. But he watched a video of mine, and he turned 18 grand into 120 grand. Donated $600 on the live stream. I'm like, what the? This guy is balling now. But yeah, that was a pretty cool moment, Just off a video you watched, or like something that resonated with you and made you take action. I think that is great. I think that's incredible. So good call on that. Go big or go home. Dream big or get back to your job. Just over, bro. Let's go. He's talking about y'all. You had some gems last night. We try. I mean, another potential gem, is like not tonight, but tomorrow. Google underperformed today in the markets. They were only up like 1%, 1.5%. We just looked at it. Do I have them pulled up still? No. Alphabet. And depending what Google's numbers are tomorrow, then like the next morning, so Wednesday morning, you do have Facebook reporting, and then Snapchat, I believe, on Thursday. So depending how Google's numbers are, because they're in advertisement business, obviously, Facebook and Snapchat are all dependent on advertising. So if those numbers are bad, then there could be big trades on Facebook or Snapchat. And these are obviously in after hours. So even tomorrow morning, you could get a trade playing the downside on Facebook or Snapchat. Now, something else that I do like as well is AMD and Intel. And you said you played the Intel. If AMD earnings are bad tomorrow, which I don't expect they will, but if they're good, then Intel usually falls on that. They have an opposite correlation as well. So like when AMD will go up a lot, Intel will fall a lot because AMD has been stealing their market share. So those are some of the best trades. Like the last, like 2,000% trade that we hit was playing Netflix earnings, but instead of playing Netflix, playing Disney, because it's the sympathy and you get way cheaper premiums. Like if you really wanted to play, when is Twitter earnings? Because Twitter and Snapchat go together. So, depending how Snapchat earnings are, you might actually be able to get a really attractive, put play usually. You could go both ways on it, because when they hit good either direction. But Snapchat earnings are bad, or before Snapchat actually reports, you can get calls or puts on Twitter for super cheap, because the trading algorithms, I guess, have not figured out that there's a inverse correlation between the competitors, and they price things way under what they should. I've hit so many over 1,000% trades on literally AMD and Intel off of the sympathies there, and Snapchat and Twitter, which, is just crazy, because they underprice them. They just underprice them. Like the Disney contracts were so cheap. Like so cheap relative to Netflix. But enough to be proud. There we go. That's funny. Yeah, I mean that is a huge risk though. 18,000 on a trade, but what do you think about puts on VXX? Could be good. Could be good. To be honest with you. Is that the 3 times leverage? Talking about CBO. Oh, that's energy sector. I mean, definitely could be good. But I mean, I think there's still peak fear to come, though, in my opinion. Could be wrong. If earnings are good, then peak fear is probably 2 or 3 months away still. But could be a good shorter term trade for sure. Certainly. I mean, because we were at April 2021 at $9. Yeah, if sentiment comes back, I mean, we're at like 20 right now. You could see a decent drop on that. And I would imagine premiums are pretty low because it doesn't move around too much, especially to the put side. You have the most retail investors buying puts right now, or just buying insurance, puts, insurance, same thing, at its 8-year high. So even before, obviously there's more retail investors, so take that into consideration. But even before March of 2020, and everybody was running for insurance. Everybody was buying puts because nobody knew. You know, you had Bill Ackman saying that the stock market was going to zero. People wanted to get paid, and they were just running out and buying all the puts they could, you know? Will have effects aesthetic. Will it help tell us how many are there out there? I think it'll give us a decent gauge. You're definitely, if there is a lot of synthetics out there, like ridiculous amounts, then it's going to you're going to see probably, I would imagine, some bullish activity as they would want to get out before it actually went live. Right. So if you have a wildly over leveraged position and you know retail investors will target you and you don't want to fuck with, 4 million or more pissed off retail investors, I would imagine you would get out of your position before it became public information. That's my opinion. It's 2022. People are going a little crazy. So I don't know. But I think that's definitely what would likely happen. I'd love a good dip to under 10 so I can load up. Oh my gosh, under 10. That would be nice. See the moon. I'm out, y'all. Peace. FJB, appreciate you, brother. Appreciate you for tuning in. Amazon Thursday will hit big, I think. Yeah, Amazon's been getting crushed. I mean, they were. I honestly, to be honest, didn't look at them today. Or that I remember, it sticks out to me. I've seen it on the ticker, but yeah, they got crushed pretty hard relative to some of the other stocks. Facebook has also gotten a little bit crushed too, but I don't even think as bad as Amazon. I think Amazon's got it worse, and Amazon was so stagnant too in this couple $100 range. Amazon actually looks, attractive somewhat at these prices, considering, everything. But yeah, you could see a big rally back to 3,500 or even down to 2,500, but I think that's very unlikely. This is priced in a lot of bad news, a lot of bad sentiment. And this was an earnings. Amazon fell. Revenue 113 billion, 110 billion. 108 billion, 125 billion, 75, 88. Geez, that was like a nothing response on that earnings. I wonder why they gapped down so much right here. I would probably look into why they dropped so hard Q2 2021. because they did rally the next quarter. But if there was something, and this was a delayed reaction too, I might point out that you actually went down after earnings about 2 days after. Or no, about you went down a little bit, 3 days, and then you started to rally and break out past that pre-earnings level. But I would look into why you literally gap down like that. If there's something, that's what investors are going to pay attention to, is whatever missed on this earnings. But yeah, that could be monstrous. Oh, thanks, my homie. Check your emails. I got you, brother. Where do you buy puts on Biden? I don't know, man. You got to call the White House. Or you got to call Ken. Ken Griffin's got some puts on Biden. That motherfucker will sell a fucking... I don't even know. Bomb to your child. Fucking crooked. Fucking crazy. And that these streams appall you do. Let's go, baby. Julie Miller in the house. Appreciate you for canceling your housewife show. That is the mob show, right? Is that mob's wife? Mob wives? Right? Still, it's been indicated to me by a trustable source that there will be a market crash. Yeah, I mean, I think, nobody ultimately knows, but I think there's what even I've explained is kind of hard to deny. Like, obviously earnings are going to come down, but if inflation is high, earnings do come down, and the Fed is forced to tighten, that's like your worst case scenario. I mean, if Russia invades, then that's also like on top of your already worst case scenario. And then, I mean, the markets pretty much always bottom out as things are kind of priced in. So what I would do is look at the markets right now, and I mean, they haven't fallen all too much in the grand scope of the move we've seen over the past 2 years, right? So it's like, if you're looking at it like this, it's not too big of an actual move. Like, once you get down to like 380 or even 390, 380, then it's like, okay, we've seen a pretty big drawdown. But I think this is just pricing in hawkish Fed and slightly lower earnings. But, I think if earnings theoretically, let's say they went down 20%, right? I think that's kind of reasonable considered all the extra money people got in 2020, that people were spending like crazy. I mean, we all spent a little bit of extra money in 2020. We got our stimulus. Hopefully it was on stocks, but people spent money. And the average company profits in the S&P 500, or just revenue in general, grows at about 8% per year. So 500 stocks, 511 stocks, I believe, are in the S&P. The average revenue growth is 8% per year across the board. So, if earnings went down or just didn't grow, which is likely to happen, then I think you would have to reconsider your future valuations. And that's where you would see a lot of your higher multiple stocks sell off even more. And if you're buying the small and mid cap stocks right now that are at least going to be profitable here soon, I think it's a great opportunity to buy those stocks right now. Buying like an Apple, maybe not. But even Microsoft, I'm pretty bullish on Microsoft because people need Microsoft. It's not like, hey, should I buy the new iPhone this year? Should I not? Should I get a new, set of AirPods or iPad or whatever? Businesses need Microsoft. So it's like they can't go without it. So they do definitely have pricing power. So I think the next really couple years probably are going to be a stock picking type situation. I mean, I would be surprised if we actually see a meaningful gain on the broad markets this year. After all things are said and done, Q3 earnings come out before Q4, because that's obviously going to be in 2023. I would be surprised considering the revenue slowdown we're going to see, but those stocks, it's definitely a stock picking year. Some stocks will do very well, some will not do well. But I think it's good. Crypto is at a resistance, but if it flips that resistance on like Donkey Kong, I think bullish on crypto right now. Yeah, I actually bought a little bit of I bought half an Ethereum, and when it was like 2,400, 2,300. What's Ethereum at? Oh, geez, 2,750. Okay. Yeah, so I mean, I'm up like $200 on half my Ethereum coin, which I'm not gonna complain, but yeah, I bought it. No, I bought it I think I bought it on Friday. I'm terrible. What was Friday? The 28th. That was, yeah. So I bought it somewhere around here, like 2,500. Now it's, yeah, and this is I think a good sign for the markets too. Because the markets in crypto, or stock market, I should say, cryptos, they usually have somewhat of the same sentiment. Like during the crash of 2020, everything sold off. Literally everything besides real estate. And real estate just went nuts. I mean, like this house that I'm in right now, I got it for such a good deal. While people were trying to move because they already had another house under contract. But I've made 100% on this house. 100%. Like the houses around me sell for 100% higher than I bought this house. Thoughts on Google earnings? Oh man. Google owns YouTube, and YouTube revenues are down about 35% for like creators. And a lot of people in the finance space, like Graham Stephan, Meet Kevin, Andre, Financial Journey, Financial Education, all these people have been saying, especially Graham, because he's been on YouTube a long time, especially in financial, because financial YouTube videos, is one of the better performing sectors. Insurance does pay higher than finance videos, but across the board, pretty much, revenues are down 35%. And how that works is YouTube ads, it's not a set amount that people pay. So it's an auctioning situation. So, say you got a video about Lucid and it's EV vehicles. So there's a lot of people that are, brokerage platforms or EV companies, whatever the case is, and they bid up certain amounts. So if people are willing to pay more, then YouTube gets paid more. And people, right now, they're not paying as much to get in front of the viewers. So I do think last quarter's numbers are going to be good. There's no doubt about that. I would not expect in a million years that Q4 numbers are going to be bad. The question is, are these companies going to be honest and take the hit to their stock price now by saying, hey, revenue is going to be down 20 to 30% next quarter? Or are they going to say, we're not going to give guidance like Apple? Apple likes to sugarcoat shit. So instead of taking the stock price hit now, watching their stock drop 5 to 10%, they're going to take that next quarter when they were on the dovish side. Things are okay, guys, don't worry, but our revenues just dropped 20% last quarter. So it comes down to, do you think Google is going to be honest about what they're seeing right now? And I mean, their estimations are their estimates are their estimates. So that's the real question. I do want to say they will be, but what I'm going to do tonight is actually go through the estimates that Google and some of the stocks I really like to trade around earnings, either before or after, like Google, Facebook, Snapchat, these advertisement companies, and I'm going to see which companies actually give guidance, realistic. When have they given bad guidance? That's what I want to see, because if they do, those are the companies that are more likely to be honest up front with the investors. Because no doubt about it, Q1, Graham Stephan says this is the worst month he's ever seen. I mean, there's usually a drop-off of like 10 to 15% from December 31st to January 1st, literally the next day after. But 35%, that's a little ridiculous, and that's going to play into, certainly. I mean, YouTube gets like 50% of the ad revenue. I mean, Google's a cash cow. Um, so, I mean, the multiples could probably compress a little bit, but I mean, I don't think. Let's take a look at the chart, because Google's actually, I don't know if I will play Google because it is very expensive and you need to see a huge move. But Snapchat, Facebook, those are probably cheaper sympathy trades to play, and the premiums shouldn't be priced as high, but they do have earnings this week. So Twitter might actually be another good one, or maybe Pinterest too, because they do a lot of advertising stuff too. But let's take a look, because the question is, if guidance was bad, how much of that is priced into the stock? And at this point, given the bounce, let's take this off to make it a little bit easier to see. I mean, $1,000. They were at $1,500, so they're still up almost 100% since 2020. I mean, revenue growth, just these are rough. So 41 billion, 38 billion, 46 billion, 56 billion, 55, 61, 65. If hard to say, but it doesn't look like too much bad company news is priced in from the looks of it. I mean, Amazon definitely has more bad news priced into it. Just looking at the charts. I mean, that's a big drop considering where it was. Could be good. Tyler doing his homework. Hit the like button. Let's go, baby. I mean, oh, Stump. Oh, I miss you, buddy. AMC will squeeze in 2 weeks. That would be solid. I mean, the markets would just go crazy. Yeah, same question. Targets of the downside and upside prediction for AMC tomorrow. Good call on the ETH. Made some cha-ching. Yeah, I mean, not a bad one right there. Honestly, I was like, geez, already? It just, I mean, I wanted to accumulate some more. I didn't think it was going to rally straight from when I sent out the alert, but I mean, I guess I'll take it. I got half an Ethereum. I really wanted to get, I mean, I believe in Ethereum long term. This is a 10x in 5 years, in my opinion. Maybe less, but yeah. Yeah, so question. Targets to the downside and upside prediction for AMC tomorrow. Yeah, AMC tomorrow, I think we're just in that weird state of limbo. So if there's if there's not any new developments as far as Ukraine, Russia, I don't believe there's any Fed members talking, because we did get like 3 of them today, which scared the markets for a period. If nothing crazy external happens, then I do think we could see a slight rally. We do have some earnings that are in the morning, but like we went over, it's not too much. Otis, Lee Harris, Train Technologies, First Foundations Bank, Acutus, 5-Star Bank. Like, nobody really cares about these companies. They're not going to substantially move the markets, in my opinion, unless there's just a terrible black swan miss that freaks out everybody. But I don't think that's the case. So I think it'll be pretty muted. You might actually see a rally. So if I were to throw a price prediction on there, I'd probably say up or down, 30 to 50 cents. Like, I don't think it's going to be a huge move either way tomorrow. Now, after hours tomorrow, that's where you're going to get some interesting stuff. And PayPal earnings, that's something interesting to point out, is I would really, if I were you guys, since premiums are so high right now, I would look at like I was saying, like AMD, but even for PayPal or GM or Starbucks, like, find the companies that are in the same sector. Like GM, with GM, their main focus to investors is going to be preaching to investors how focused they are on, say, EV, how they expect those sales to be. So if GM says they're just very bullish, EV's doing great, then maybe your Neos, Lucids, or Teslas could be good sympathies, because they all have earnings that are down the line, or like Tesla, have already happened. And I believe Tesla did good today, but they were down a lot. Or, like AMD, we said Intel, that's this main sympathy to that. But with PayPal, there could be a lot of other sympathies there that are within the fintech sector. SoFi could do very well off of that. Square could do well off of that, or bad off of that, just depending what they pull out. But their earnings are still down the line, so there's not going to be as much premium baked into those trades. And you can actually get similar moves. PayPal goes up 10%. Square's likely to go up around the same amount. At least that's what you see with a lot of direct correlations. Or, AMD. If AMD is good or bad, you could also play Qualcomm because they are a huge chip maker as well. I used to own Qualcomm, but I sold it. I wish I wouldn't have, but I think it's going to be good. I mean, you have a good lineup of earnings tomorrow. It's going to be exciting, to be honest with you guys. I might stream it too, but you got some dang knowledge under that goofy hat. Oh, let's go. Appreciate you. Yeah, I try. I mean, I just love this shit. I love the potential and opportunities that are just in financial markets. Like, sure, there is sectors that are just really manipulated. Like the fact that they can, like, man, Apple knows they're not going to have great revenue throughout the year, but we're not going to give guidance. We're not going to give guidance because we don't want to freak you guys out. Like, some of that shady stuff is not good, but overall, there's still so much potential in the markets. I'm interested in Ford price action after earnings. Yeah, Ford's going to be an interesting one. I was actually looking. I seen Kathy Wood's strategy of like shorting Ford and GM while she's long on Tesla. And, the logic kind of makes sense. And I would like to get your guys' feedback on this too real quick. The logic is, like, with EV vehicles, there's not as much maintenance. So you're not going to get oil changes. You're not having as much maintenance. So car dealerships, Ford, companies like GM, they won't make as much money. Well, now GM and Ford's, their gross profit margins are in between 10 and 15%. So, while you're ramping up EVs, it's very low margin. You're actually losing money for a long time as you ramp up EVs because they're expensive to make, and you can't price your vehicles at $100,000. Nobody's going to buy them. But essentially, what the argument is that Ford and GM have a huge gas vehicle presence. So what happens then when they start making EVs is theoretically the same customers that would have bought a gas vehicle are now just buying EV vehicles. So for a while, they're going to lose a lot of money, but theoretically, if their margins are not super, super good, like better than Tesla, they're not going to see actual revenue growth as much in the long term or at all because they're just swapping out one customer for another. So interesting argument right there. I think there is definitely an interesting conversation right there. You follow any energy companies? Lithium, uranium, fuel cell? I did follow fuel cell for a long time, and I actually owned it when it was way cheaper. I was so surprised what fuel cell has done over the past 2 years. When did I own this thing? I feel like this used to be like a penny stock. Maybe I'm thinking of a different one. Come on. What? Oh, it's playing. I think it logged me out. That's tough. Okay. I guess I'll pull it up. Weeble sucks sometimes for that. Oh, it's a penny stock again. Jesus. Oh my God, I haven't looked at this in a while. Oh my gosh. Yeah, they've had a lot of reverse splits along the way. That's crazy. But yeah, no, I was buying this thing in this range. Like, I bought it like the 50 cent to like the $1.50 range, and I was so surprised. This thing ran up like crazy, came straight back down. The problem with fuel cell is from what I believe correctly, it's been a long time since I like researched the stock, but um, it's hydrogen, right? If I believe correctly, right? Hydrogen. So it's just very hard to get people adopted to something new. I believe it's hydrogen, right? Maybe I'm thinking of a different company, but I believe so. It's just very hard to adopt people to new things. There is like hydrogen gas stations, but they're just it's hard to scale that, and they've had to take on a lot of debt. It's just a high, you know, costly venture. So I mean, can you see gains in the stocks? In the short term, I think so, but in the longer term, it's like, it's a tough call. I mean, at these prices, it almost makes sense to play a bounce, certainly, especially when it's going to move 15% in a day. But I don't cover a lot of them, to be honest with you. Bro, love your content, man. Thanks for going live at this time. I believe heard you mention you are in real estate. May I ask a question about that? Of course, yes. Real estate questions are always welcomed. Appreciate you, brother. What happens with an EV car in a major traffic jam when it's freezing snow? Is everybody going to freeze to death? Oh, I don't know. I believe they got heat, right? Hopefully they do. Yeah, I mean, if the car dies, phew. Keep portable solar chargers in your car. Interesting. See you, Julie. Appreciate you for jumping on. I gotta wake up early. Nice info. I fall asleep. Listen to you whisper sweet stock knowledge softly next to me. Is this softly for you? Is this okay? Good night, brother. Sweet dreams. Oh, you're funny, man. I love it. Maybe there's some interconnected reason for the squeeze. My dad was a banker and was in contact with the financial world. I know loans he gave out were sometimes basically bought off with favors. Yeah, a lot of that. A lot of that happens. I mean, that's what was pretty much going on all throughout before the great financial crisis. But I mean, people are going to place their bets before, and we're starting to see a lot of buying going on from the institutional side. We're holding to 100K for all the disrespect towards it. They're putting us through bottom line, baby. High finances is shady. I know that. Yeah. I heard China load up on AMC to compare the U.S. economy and take all the wealth. China's interesting. The stock whisper. We're gonna make fat tendies. Yes, sir. Ladies and gentlemen, welcome back to the 8 podcast with DCI, and we talk stock and options and fuel cell, and not about politics or young Biden or Russia or anything else. Only stock futures. Yes, and they're quite red. Okay. Sorry, bro. Red or green tomorrow? Ruh-roh. A little red maybe to start, but I mean, things could turn around. You're probably not going to see a huge move, and I mean that doesn't sound very popular when I say it like that, but there has been a lot of volatility back and forth. We just don't have a huge amount of earnings tomorrow morning. I really wouldn't hold too much weight on either side. If I were to imagine, probably green, because just we seen a strong close today. But wouldn't surprise me to be slightly red like the futures are right now. Oil's popping a little bit. Green we squeezing from here on out. Green we squeezing. I mean, it does make a lot of sense to move up right now. You whisper into my icebox, I see you tomorrow, and attack that Bud Light. Let's go. Bud Light for the win. Uh, Somebody asked a question about, what are your thoughts on this week? Lewis seriously ramping up the squeeze talk. Just put out a video about what happens after 73. I mean, uh, there's just two different scenarios. Either the markets really go down to the dirt, and then you see the shorts be forced to cover. That I think is going to be the end MOAS. Like the end be all is once liquidity is gone and there is no longer an option to stay in a short position. I think that's the end. Um, could I certainly wouldn't say like by the end of the week or anything like that, because it really has nothing to do with AMC. It has everything to do with the broad markets and what happens. If earnings are good and money does flow into mid and small cap stocks like we've seen today, like we've seen over the past, yesterday too, I believe. Days just get mashed together when you go up 4% and down 4% in a single day and whatnot. But I think that's more of a temporary squeeze if we went from like 16 to 30 by the end of the week. Like that would be some shorts covering, but that would probably only drop the short interest by like 1.5 to 2%, maybe, if that. And if the markets are going up, there's usually an option to stay in your short positions. That's why we have not seen shorts cover when they probably should have, when there was plenty of catalysts to force them to cover. They just didn't have to. They had too much money. So when the markets are going down, people are fearful, institutions included, because I mean, nobody knows what's going to happen in the stock market. Nobody knows. I mean, Ken Griffin probably has the best idea. To be honest, he probably has a pretty good idea. He's like, I'm going to push this button today and fuck them, and then I'm going to fuck them, and then I'm going to fuck them. But other than that, I mean, I think it would be a shorter-lived kind of situation. I think ultimately, after this quarter's earnings, next quarter earnings, when things are really not looking good, when the Fed is tightening, once the balance sheet is being reduced by likely estimated $100 billion a month, that's where people are going to freak out. Like, hey, what if the Fed pushes us into a recession? That's a problem. And a recession is a broad term. A recession is, 2 consecutive declining quarters of growth, declining quarters of growth. It could be a small amount, it could be a large amount. There's really no set parameter for that. But that would be a recession. Your economy is shrinking. And that's ultimately what is going. I mean, I think it's safe to say that's going to happen when you, expand the economy with a lot of artificial money, give money away, devalue the dollar. You should expect some level of shrinkage. Now, how much is that going to be? I don't think that's priced in by the markets. I don't think you're pricing in a expansion like we've seen and then a shrinkage like we've seen. And it's not going to shrink all the way down to where it was, but certainly it's going to shrink down somewhat. I don't think that's priced in too much. Mixed with taking money out of the system, balance sheet running off at the Fed, raising interest rates. But that could ultimately set us up for that big dip, because the Fed didn't even step in to save the markets. During 2019 until the markets were down like 35%. The Fed let the markets get whacked. Like they stepped in here at the bottom. Like they didn't even care. 2018, markets down. They finally recovered, hit all-time high for like 4 weeks, right back down 35%. So the Fed's not going to step in unless inflation is lower. And if you just get the right events that I can picture lining up, mix in whatever the hell is going on in China, we all know, the leverage situation, then I think that's when you really see the end all be all MOAS. When you look at it, it's basically built on the original concept of if I give you, you give me 2 back. The extra one is the debt is great debt and comes from the next transaction. Yeah, it's I'll get super deep into thinking about just the whole economy, how it works, and I'm like, this can't go on forever. because eventually everything comes to an end. And to be realistic, with this or with anything else. Maybe that was a bad explanation. What are your brackets? I believe I understand what you're saying. What are your brackets to sell? I mean, 5 to 10,000 I think is reasonable if you're down in the dirt and shorts are forced to cover. If there is no choice, the fund goes bankrupt, insolvent, or you cover on your position at $1,000 per share. That's the only reason shorts are going to cover at $1,000 per share. Because why would you not ride it out unless you were forced to? So, you have to see a major liquidity draining event, like the market's going down substantially. That's not no. That does not circumference or whatever hell else word you want to describe it. This is not that. Now, this or this, that is that. That is a mass liquidation. That is pain. We can talk once the markets are down 35%. They only dropped 10% and people are freaking out in the broad indexes. Now, the money is parked in the indexes and in the large cap stocks. If a hedge fund is in the small and mid caps, yeah. Fucking margin call city, right? But you've seen pockets of the cash reserves for hedge funds, because you're not going to put your money in bonds, you're not going to put your money in the bank, you're going to put your money in big tech. You're like your Apples that are not going to drop 10% in a single day. Once those stocks go, especially if we don't get a major recovery, if our small and mid caps don't recover, like, not quite to all-time highs, but if they don't even recover close to that, and then you see big tech sell off, that's where you get the major market liquidity crisis. I mean, there's no other way to really put it. That would be a crisis for everybody. And the Fed, I don't think, would be able to step in with inflation so high. So they might try to sound more dovish, but man, you're going to have so much just pain. And I mean, once they're forced to cover, Evergrande is going to be the situation. I mean, that's going to be very bad, I think, later into this year. I mean, you could see it with China, like, cutting their interest rates, things they don't do all the time. Like, China is notoriously known for not cutting rates too often. And when they do, they tend to cut multiple times. Like, they'll leave them flat for years, and then they'll cut like 4, 5, 6 times. And the same thing to the upside too. They'll raise it 4, 5, 6 times at once. And you've seen that cutting cycle start, and I think that's gonna continue to happen, and that's gonna be a big flag. But China has had the highest growth in a more modern economy than you've ever seen. So certainly, or a higher growth rate, and a lot of that is just fueled by debt. Once the economy slows down like it does around the world, which is likely happening right now in China, that's where you see a lot of issues. And there is plenty. It's not like America even, where there's like a lack of like housing. Like, China has plenty of houses. They have abandoned cities. Like, there is houses out there. Well, 90% of the population lives in apartments, but there's plenty of apartments out there. So I think that's definitely one of the dagger in the coffins, for lack of a better word, for China. But hold your family future, think money all these days evaporate fast, so hold for family. Oh yeah, we're in there like swimwear, baby. Charlie, what do you think about the new reg? Will they do it early or wait the 30 days? I mean, considering the market volatility, if we do see a down week this week, because it's very possible. I mean, we've seen a 3% move on the NASDAQ, but we can do that tomorrow if something developed. If we do see, strangely enough, if we see the markets continue to go down, that'll put a lot more pressure on the SEC to do that, to make it more transparent, so they can figure out who's over leveraged, who's disrupting the financial system or potentially going to disrupt the financial system. So Oddly enough, if you see the markets coming down, it'll probably get expedited and be done faster. Uh, if not, I still think it'll be done as fast as possible. And, as fast as possible in like government terms is like 10 months later. But still, yeah, I do think. But ultimately, I think once word gets out that it's been passed, that could also cause the most over leveraged, over allocated shorts of AMC to cover. Like a short that has, say, a BlackRock or a fucking, somebody like that, a very large fund. Say they have like 0.10% of their portfolio in AMC shorts. I'm sure they're not going to rush for the door because they don't have anything to hide. They have a very small position, nothing to hide. But your firms that say have a 10% allocation of their portfolio in an AMC short, I think they would definitely run as fast as they could to the exit. As fast as they could. So 10 months later. I've decided this guy doesn't really know what's going on. Every thumbnail he says ride it dawn, starting to look stupid after a few weeks. I mean, it's just we ride it dawn. I mean, if you don't feel it, you don't feel it. This might not be the right place for you. But the way that I look at it is I mean, you're pretty much fighting with your money every single day. And there's a lot of decisions. It's like a battlefield, an unofficial battlefield. If you know what I mean. Like the only thing more deadly than the stock market is actual war. I mean, people kill themselves over the stock market. So if you want to be literal about that, I don't even mean it literally, but I mean, people do kill themselves because they lose money in the markets. But that's on a whole more literal note. But I mean, the stock market is the closest thing to actual battle or like riot, like War for the Planet of the Apes. You obviously don't get the analogy there, but that's what they do. They ride at dawn, they go fight, all of that. Some of my favorite movies. Ironically, I invest in AMC and talk about AMC every day now. But yeah, we ride at dawn. I mean, I'll switch it up for you guys, but I just would like it to be somewhat consistent so people know, like, hey, that's the stream. Like, not everybody, knows when there's different random fucking shit going on. Skip. You're right in what you said about the banks are obligated to give you all the funds deposited. If everybody went on the same day to make everything, it wouldn't be possible because it's tied up. Yeah. There's yeah, that's like the craziest argument ever, that like you somehow are like not gonna get paid. The banks, right? You know what I'm saying? They don't have all of the money in the banks. Like, they're gonna be like, yeah, dude, we don't have that. But I believe they have like 48 hours, I believe, correctly, correct me if I'm wrong, to get you your money to an actual physical location, or give you some kind of, usually just a cashier's check. But yeah, with the whole IOUs, they only need to get you real shares when you go to sell. And when people are not selling as much and they're buying way more, then they can issue more IOUs. And then ultimately, the issue actually happens because there's no issue. Well, that's a broad term. There's no issue with the brokerages and making the price go up by not having enough shares until a lot of people want to sell. And then they're going to have to do that. They're going to have to let you sell at your price unless they disable the buy button. But who the fuck wants to be the next Robin Hood that goes down in the... I mean, nobody... Charles Schwab does not want to go through what Robin Hood went through. Or Fidelity, or TD Ameritrade, or Webull. None of those motherfuckers want to do that. I mean, you're just kiss your company goodbye. But anyways, that's where the issue will come in. Not for us, for them. I mean, we're still going to get paid either way. I mean, that's like a hedge fund with a short position. It does not matter if they lose their whole fund. You'll still get paid. I mean, there will be a margin call to make sure you get paid. Want to listen, but your volume is too low. Yeah, sometimes I forget to turn it up. I don't know why it's just so low. Is it low right now? The market maker can see your hand. That's a good analogy. I was hoping get implemented by Friday. Certainly possible to have that implemented by Friday. They want to see you and your children working slave jobs and nothing to show for when you get older, so hold to 100K. Hashtag 100K. Yo, Tyler, joining you late tonight. Thanks for the stream. Futures look like, boy, yeah, they do. A little bit. I mean, they were worse, but it's matched up, red, which is not something we usually see now. But, pretty new transparency rules, something like that. Is that true? Yeah, they'll be finalizing it and all that. It's just proposed as of right now, and then pretty soon I would imagine that it does get implemented, because it's obviously a problem. Everybody knows that, but I think the SEC have a pretty good idea of the kind of problem it is. They'll be delivering my AMC tennies and golden bars in a Brinks truck to my house. Oh, wouldn't that be nice? A Brinks truck. Oh, man. Imagine that. I seen somewhere in California, Brinks truck had the doors had opened or some crazy shit, and there was just money flying everywhere. What, San Diego maybe? And people stopped on the highway picking up the money. I'm like, well, do I blame you? I don't know. This man said, I quote, "No one wants to be the next Robin Hood, take away the buy button." Then he says, if there's a mass liquidation of 5K share, we get paid because they're going. Yeah, exactly. Yes, 100%. I mean, what doesn't make sense there? No one wants to be the next Robin Hood. I mean, exactly, because they will lose business. They will lose their reputation. They will be the next hated brokerage. Well, actually, how it works, just so everybody knows, but specifically, Jasper, it's that's why you have like the SEC, believe it or not, FINRA and all those people, is because like Archegos, right? The bank's gonna take the hit if anything. Whoever is on the back end, there's always insurance for everything. So believe it or not, brokerages have insurance as well, right? I'm sure you guys already know that, DTCC and other entities. So it's not a question of like they go bankrupt, you get paid, and it wouldn't be the brokerage. It would be the hedge funds. I mean, I don't see how the brokerage is going to go bankrupt in that situation. I mean, I don't really see how that's a possibility. Like, Robinhood didn't have to do what they did. They could have easily got enough money to let GameStop run as high as it wanted. They just did that because why do the extra shit? Why get billions more dollars around, 100% chance of going out of business. Well, I don't think they would. I mean, I don't think they would go out of business, because ultimately the brokerage is just a means of exchange. But either way, they're going bankrupt. Why wouldn't they just pull the buy button and deal with the ramifications of being halted, then go bankrupt? Brokers go bankrupt first, then it goes to the banks. Interesting. I mean, the Archego stuff, the banks did take a hit. The banks have a lot of inside information, though. The biggest banks that took a hit was Credit Suisse. They took like a $5 billion loss. But right before all that happened, JP Morgan and Morgan Stanley or Goldman Sachs, one of the two, JP Morgan, one of those other two, they sold out of like they got out of that situation with Archegos just in the nick of time. Like they know, we have like the crumbs as far as information is concerned. The big guys have a pretty good idea of what is going on, but they're all making money. It's like 2005 all over again, but in equity markets instead of real estate. Everybody knew the scam that was going on in 2005. Everybody knew. You know what? They didn't care. They were making hand over fist. The banks, everybody. They knew exactly what would happen. Think about the Melvin Capital hedge fund insider buying the squeeze is almost here. That would be good. Born on dominance, we're a predatory race of beings and break down everything regarding this society developed over time. From the thousands of trucks going to the banks, they don't run out. There we go. There we go. Oh, yeah. Okay. I get up at like 8:30 in the morning, so I'm going to get off the stream. It was a great time with you guys. Appreciate you guys for being here. I'll turn up the volume in the videos like you guys said. Thank you. Thank you to the mods, Vlog, all you guys that are in here. I mean, it's late. It's like midnight. So, thank you guys. You guys want some free stock, linked in the description. Buy and sell alerts. Come join me, Vlog, and some other great folks over there if you guys want to be a part of that. Thank you, God the Heavenly Father, as well. Vlog, all you guys. Thank you, the mods. But, you guys, enjoy your night. And sleep tight, baby. Appreciate you guys. I'm just playing. I appreciate you. Dan the man in the building. Let's go, baby.